Hey everyone, welcome back to the channel. I'm Ivana, and here we talk about investing, building wealth, and creating financial freedom one smart move at a time. Today we're talking about 3 index funds that you can literally hold for life. We'll go over what each one is, how they're different, and which might be best for you. Plus, I'll tell you which one I personally think is the best buy and forget option. So make sure to hit that like button, subscribe if you love learning about investing, and let's get started. Before we jump into the funds themselves, let's quickly break down what an index fund actually is. An index fund is basically a basket of hundreds or even thousands of stocks designed to track a certain section of the market. So instead of buying one single stock, like Apple or Tesla, you're buying a little piece of every company in that index. The cool part? You don't have to guess which company will win because you're investing in all of them. They're diversified, low cost, and passive, meaning you don't need to check them every day. Just invest regularly, and over time, your money grows with the entire market. Now let's get into the 3 most popular and my favorite ones: VTI, VOO, and SPY. First up, we've got VTI, the Vanguard Total Stock Market ETF. This fund tracks the entire US stock market, not just the big companies. That means it includes large cap stocks like Apple and Microsoft, mid cap companies like Chipotle or Square, and even smaller growth stocks you might not have heard of yet. In total, it holds about 3,000 companies, which is massive diversification. If you want to literally own a slice of every American business, VTI is your best friend. Expense ratio, just 0.03, which means you're paying only 30 cents per year for every $1,000 invested. Over the last decade, it's returned roughly 10% per year, which is a solid long-term growth. This one's for people who want to set it and forget it. Total market exposure, long-term growth, and ultra-low cost. Now let's talk about VOO, another powerhouse from Vanguard. VOO tracks the S&P 500, which is the top 500 companies in the United States. Think Apple, Microsoft, Amazon, Google, and all the major players driving the economy. These are the most stable, profitable companies that make around 80% of the total US market value. So you're still getting a ton of diversification, just focused on the bigger names. VOO is known for its simplicity and strength. Expense ratio, again, only 0.03%. If you believe in long-term strength of American companies, VOO is an easy choice, consistent, reliable, and battle-tested through every market cycle. Now we've got SPY, which also tracks the S&P 500 just like VOO, but it's a bit different. SPY was the first ever ETF, launched way back in 1993. It's the most traded ETF in the world, meaning it is super liquid. Big traders and institutes use it every single day. Performance-wise, it's almost identical to VOO since they both follow the same index. However, SPY's expense ratio is a little higher at 0.09% compared to VOO at 0.03%. That might sound tiny, but over decades, those costs can add up. So SPY is amazing for short-term traders or options traders who need liquidity, while VOO is better for long-term investors who want the same exposure but lower costs. Now let's talk about my take and strategy. If I had to pick one to hold forever, it would be VTI. It's the most diversified. It automatically adjusts to new companies entering the market, and it captures the entire US economy, from giants like Apple to startups growing fast. My personal long-term plan: invest a portion of every paycheck into VTI, reinvest all dividends, and just hold. No panic selling, no timing the market. Because remember, time in the market beats timing the market every single time. So those are my 3 index funds to hold for life: VTI, VOO, and SPY. If you found this video helpful, make sure to hit the like button, subscribe, and drop a comment telling me which one you hold in your portfolio, or which one you're thinking of starting with. Thanks for listening!